Good morning, good afternoon, good evening. Welcome back to the channel where we talk about economics and crypto and lots of other fun things. As always, thank you for making me a part of your day. Before we dive on into this, do me a favor, hit that like button, turn on the subscribe button, turn on the notification button, all the above. Leave a comment in the comment section, all for the algorithm. But without further ado, let's go ahead and dive on in. Could I please get rid of this promote button? I guess not. This is from my X account. Give me a follow on X if you have not already. The federal funds rate remains the same and balance sheet unwinds are continuing. This is from the Federal Reserve minutes that have been dropped. And so what does this mean? It means same old, basically. At the moment that I'm making this video, Jerome Powell is speaking. It'll be interesting to see how the market reacts to that. But there's a couple of big things to just keep in mind from this. No surprise to what we're seeing here, so let me read the circled part. In support of its goals, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. Uh-oh, I did not mean to do that. Let's go back. Okay, in considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, blah, 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 blah. Okay. The committee will continue reducing its holdings to the tune of $5 billion a month, which isn't really that much. This means that we are still by the book in a phase of quantitative tightening. In a phase, by the definition, even though we are soft easing right now, we are by definition in a phase of quantitative tightening. The committee is strongly committed to supporting its maximum employment, returning inflation to its 2% objective. We're in the United States at 2.5, 2.6, something like that. The next paragraph, I don't have all the words on there, but maybe some dovishness, maybe some implied dovishness here. But the next tweet, not so sure. So what do we have for, I made a video about this, and this is just reality, guys. And I'm sorry to say this is reality for right now, and it's okay. But we are in a phase of quantitative tightening. We have been in a phase of quantitative tightening for 3 years, more than 3 years, much more time than when we were in quantitative tightening from 2018 to 2019, and much more time than when we were in quantitative easing from 2020 to 2022. This is just where we are right now, and look at what Bitcoin's dominance has done during phases of quantitative tightening. I did make a short form video talking about this, and so watch that short form video. But when will quantitative tightening end? The next Fed meeting is in July. Maybe they will end the unwinds to their balance sheet at that time. The one after that would be in September. Maybe we're going to go even to September when we would be in this phase of quantitative tightening. So until something changes with that, we should expect Bitcoin dominance to go up. Now, is there hope with this? I'd say so. Listen, we are very far off from quantitative easing. That's just reality. We are far, far off from quantitative easing. But, we don't have much history of what happens when we exit quantitative tightening. In fact, we only have one example here, and Bitcoin dominance did go down. And then we have another gap period here, but that's after quantitative easing where it just chopped. And so if there's any hopium from this, maybe Bitcoin dominance will just stop rising and it'll chop after quantitative tightening is over, or dare I say, maybe it'll even go down. Or you could highlight this period here from 2017. I wouldn't count this as anything, this period where there was no quantitative tightening or easing, and look how much Bitcoin dominance dropped. I mean, Bitcoin was pretty much the only cryptocurrency. I mean, I know there were plenty of other cryptocurrencies that existed before February of 2017, but that's such a different time from today. But, could we see something in terms of an altcoin movement when QT is over? It's possible. It's possible, guys. But, I mean, the trend is up during quantitative tightening. And while we have at least another month of quantitative tightening, so the trend should be that Bitcoin's going to go higher and altcoins are going to bleed. Maybe there will be some that outperform. Maybe Ethereum is going to hold up now that we have with the spot Ethereum ETFs level of accumulation. That's actually pretty interesting. We will see. But Okay. Brett underscore ETH here says, when QE, bro, 7 Fed members said 0 rate cuts this year, up from 4 last month. If we are going to have 0 rate cuts this year, we are not going to have, their definition at least, of quantitative easing. It's just not happening. We are still far off from quantitative easing. Will it happen in 2026? I don't know. Will it happen in 2027? You know, I mean, what would trigger it? Would be either it would have to be something scary. I'm sorry, it would have to be something scary. And what's that scary thing going to be? It would be something that short term would cause a lot of pain. So best case scenario, again, we end quantitative tightening and Bitcoin dominance either remains where it is or it chops. I'll take a chop because it makes sense to be bullish on Bitcoin right now to the end of the year and maybe even later than that. So moving on. A couple of charts here that I want to show you. And if these projections are correct, then we're screwed with altcoins. But I don't think these projections are correct. Okay, I want to be clear about that. You know, it's the same people going over and over again, talking, relying on past cycles, saying this is what it's going to look like this time. And I just can't get on board with this. If you want a massive alt season this cycle, I cannot get on board with the timings of these peaks. Now, this is talking about Bitcoin. So, you know, highlighting June of 2013, 2017, 2021. In 2013, when we hit June, it was 5 months until the peak with no down months. In 2017, it was 6 months to the peak with 1 down month being September. And then in 2021, it was 5 months to the peak with 1 down month. And so the thought is, okay, what about this time? Are we going to have 5 months to the peak or 6 months to the peak? November, December of 2025, that's going to be the peak. Okay, all right, be careful what you wish for, because if so, Bitcoin dominance is not going to go down all that much. We'll have moments. We'll have some moments. I mean, maybe the biggest thing would be Bitcoin would just go absolutely parabolic and shoot off like crazy, and then there'd be a lot of profit taking and rotating into altcoins. But if this is what you're hoping for with Bitcoin peaking 5 or 6 months after the peak, be careful what you wish for, because we are not in an environment where altcoins are ready to explode, even now. And so we have that with Nunya Business here. We have from Leo Hart, a huge bull. Bitcoin's next peak and trough dated. I hope so. For the sake of my Bitcoin bags, I love the idea of buying low and selling high. And if it's going to be like clockwork, like the Bitcoin H clock here, then great. Let's do it. So Leo Hart introducing the Bitcoin H clock, a cycle calendar model that claims to forecast Bitcoin's market phases with remarkable precision. The thesis of this model pinpoints the next major market turning points with startling specificity based on its calculations, which were accurate up to seconds. Oh, wow, even seconds. The upcoming cycle top is projected for October 4th, 2025, and the subsequent bottom is anticipated on October 26th, 2026. The calendar suggests the peak will occur 542 days after the last halving, and the bottom will arrive 521 days before the next one. Okay, again, be careful what you wish for. If this is how it's going to play itself out, then I just really don't know what to say about altcoins. The hope again would be that Bitcoin would shoot off like crazy and peak in October, and then a rotation to altcoins, and then it's over. I have a hard time seeing that as being the case. Now, with that out of the way, is there reason to be hopeful? I would say yes, absolutely. Like I said, what's going to happen when quantitative tightening is over? It should be over pretty soon. I'd be shocked if we were at this point in September and quantitative tightening by the definition on the book was not over. So there's hope in that regard, but then there's other things that I would say should be causes for hope. So we have from Alpha Fractal here, the 100-day open interest delta turns red. What's next for Bitcoin? Over the last 6 months, we've seen more leverage positions close than open. The 100-day open interest delta has gone negative. BitGet, CME, biggest contributors. On the flip side, it's Gate.io, who's doing the opposite behavior. Historical context. In 2021, when the 100-day, and I'm going to show you this chart, OI delta turned negative, Bitcoin traded around 31 to 41K just before surging to the 69K all-time high. In 2023, 2024, each negative OI delta coincided with local bottoms for Bitcoin. The exception 2022, when lots of bearishness. So, key takeaway, if OI delta turns positive again, Bitcoin could be on track for new highs. In the coming months, if the reduction persists, it may signal further prolonged downside pressure. And so 2022, OI flipped negative, it was done. I mean, that was the end of that bull run. But you can see OI flipped negative in 2021, very close to the bottom and even after the bottom. And this is a really fascinating time right here in September of 2021 when open interest was very negative, because I know for a fact, I remember there were a lot of people calling this peak in September a retrace, a 702 retrace. So it wasn't a retrace. It ended up actually being just a fake out. A lot of bears got wrecked on the way up to $69,000, and then it was over. So we have these little moments of negative OI delta, and they marked bottoms. And aside from 2022, they marked bottoms. In 2021, August 5th, I remember that, Bitcoin went under $49,000. That was a bottom. And here we are, we flipped negative again. And is this the bear market, or is this a local bottom? It is more likely local-ish bottom. I'm not saying that 103 and change is the bottom, or we got to 100.4. I'm not saying that that's the bottom, but I am saying it's very unlikely to me that we're going to see more than a 10% drop in Bitcoin, given everything that I've seen so far. And so I've made a compelling case for that, I believe, in the previous video, yesterday's video, and I hope with this video as well. So, sentiment. The ongoing conflict between Israel and Iran has led to a visible increase in volatility across crypto. Sentiment data showed major bearish sentiment coming in between June 12th to 15th in particular, coinciding with a 4 to 6% drop in Bitcoin's price and erasing over $200 billion from crypto's total market cap. Despite the initial panic, Bitcoin has remained in the 104 to 105 range, aided by consistent ETF flows, and a lack of follow-through in military actions, mirroring the typical, quote, risk-off then stabilized pattern seen in previous geopolitical crises. This pattern closely resembles Bitcoin price reaction to Russia's invasion of Ukraine in February 2022, when Bitcoin initially dropped off, then rebounded before quantitative tightening, basically, before rising interest rates decimated prices later that year. The Israel and Palestine conflict that erupted in October 2022 also saw Bitcoin drop 7% before stabilizing within days. And you can see Iran-Israel conflict having impact on crypto, and really interesting. So social volume Iran, social volume Israel, a significant uptick in social volume in both of those countries. And that is right after the peak, right after Bitcoin's peak. Quite a little bit after Bitcoin's peak at $112,000. But let's moving on. As of June 18th, futures market power stands at 93K, indicating a moderate skew toward bearish positions, but no signs of aggressive selling pressure. Bitcoin's price remains confined to a narrow range, holding near all-time highs despite the bearish pressure on the futures market. Compared to previous bearish spikes in this cycle, today's pressure is weaker than any seen since 2024. In this context, the moderate bearish tilt more likely reflects traders' confidence in a further move above the current all-time high than a genuine threat to the primary uptrend. It's worth noting that short-lived bearish power spikes in the 15K to 100K range, January 2024, July 2024, April 2024, resulted in only 5 to 10% local price corrections. So again, 5 to 10% from the peak, that makes sense to me. 30%, like what we saw, where Bitcoin got under $75,000 earlier this year, not so much. That doesn't quite make sense. But we shall see. Zhao Wedson, one of my favorite small accounts on X. Just a really interesting chart here. So this is in regards to money supply. Russia is the country with the highest annual percentage change in M2 money supply in the world. If you know anything about what's going on in Argentina, you should not be surprised that Argentina has declined. Its M2 has gone down significantly. But everywhere in between, we have Nigeria, Poland, Norway, Iceland, Sweden, Switzerland, also experiencing M2 growth. And if you're wondering where the United States is, pretty much right in the middle, next to UAE and China, believe it or not. And there was a time when China was very hot, but not right now, I suppose. And so interesting, something that I'm making a mental note of here is like yellow is neutral. And so if we're seeing global M2 increase at the rate that it's increasing and yellow is neutral, then you can just tell by this chart, this is in order of, ascending from the biggest local increase, recent increases in global M2, and all the way down to the least. And there's yellow is very close to the bottom of this list, which means, of course, that global M2 is still rising at a pretty dramatic rate. Something I found interesting, so I talk about this guy's account all the time. I just really love his stuff and the visuals with what he shares. So check that out. But shameless plug, I don't even want to call it a shameless plug. It's like, how about you take advantage of something that you do all the time? So you can see here I filled my 12-passenger van, paid $74.52. In my Gemini account, I saw that I got $3 worth of Bitcoin, and this is just going to be a normal part of my life now because that's 4% back for gasoline purchases, 3% for groceries, 2% for restaurants. I believe it's like that, and then 1% for everything else. And you can click on the link here, and I will include this link in the description section of this video if it is something that you are interested in taking advantage for things you normally do. You and I will both get $50 if you sign up. I enjoy it a great deal. Thank you for hearing my commercial. But anyway, that is all I have for today. I hope you have a wonderful day, a wonderful rest of your week. And I will most certainly be seeing you in another video. Peace.